Welcome to Momentum Monday, to Momentum Sunday.
Sunday night. Ivan, what is that a picture of back there?
In the background, that's my best friend from university. He has a sister who is a very popular photographer in Bulgaria, and she goes camping in various Bulgarian mountains and just takes really beautiful pictures. So she made a calendar and they gave one to me. So I have it in my office.
That's a long story.
Yes, very long.
Holy smokes. I don't even think I can do the show now. Meanwhile, your setup in Senegal looks the exact same as Bulgaria. What is going on? Were you really in Bulgaria?
Yes, absolutely. I was in Bulgaria. I showed you a picture from my window, so.
That's the same window.
No, it's a different window.
All right. All right. Sunday, what is today? February, no, 15th.
17th.
What'd you do for Valentine's Day?
So we went and had a gym session together. We had a F45.
Keep this under 40 seconds.
And after that, I cooked. I cooked for more than 3 hours. That's how long it took.
Pasta should take about 5 minutes.
Well, not the one that I cooked. I cooked a special bolognese spaghetti, and the sauce takes 3 hours.
Is there any marijuana in there?
No.
Okay.
The sauce had 20 ingredients, and it was slow cooking, so it just took forever. But it was really good. I think it was the best bolognese I've ever had. So maybe I have a hidden talent.
No.
I'm switching careers.
Stick to swing trading. Have you watched that show where the guy eats spicy wings? You would like that show.
No, is it on Netflix?
No, I always share it. Thanks for reading my blog. Okay, let's go to today's Momentum Monday in the markets.
All right, let's go. Here we go. All right, now we should be able only to see my screen. Let's start with the S&P 500. Incredible. Go ahead, Howard.
No, let's go. You got the utilities up there. Oh, no. Now you got the...
Yeah, incredible recoveries. The S&P is up 20% since the Christmas lows. And I think we're quickly approaching the 280 level, which has been an important area of resistance for a very long time. If we look at on a weekly.
8 in a row I saw. That's really incredible. Fascinating. Ever since Munchen said really incredible how crazy it was just a month or two ago, and how calm it is.
Exactly. Now we're starting to see fear of missing out is starting to take precedence, and because almost anyone who is an active money manager is probably underperforming. If you are not fully invested on January 1st.
Yeah, you can't outperform what January was unless you were 100% invested in December and took a beating.
Yeah,
fascinating. JC had some interesting charts. So we're like 5% below all-time highs maybe on the S&P, which is neither here nor there. It is what it is, right? I don't have to analyze it. But JC had some interesting charts on the equal weighted indexes. I don't know if you pulled them up for me.
Okay, are they on stop quits?
You're as prepared as always.
All right, let's see. Oster.
He had a great series of equal weighted.
I'm gonna find them. No worries. So let's see.
Well, that
equal weighted XSD.
One more down.
Oh, one more down. Okay.
That's semiconductors, but this is the equal weighted NASDAQ 100. So,
yes.
So I think this is interesting with Amazon down 20%, and I think this is the most interesting chart of the week. It's just a chart like anything else, but this is equal weighted. Whereas if each company in the NASDAQ 100 had if you owned an equal position of each, Okay, so not market cap weighted where Amazon, Apple, because Amazon and Apple are each down, over 20% from their all-time highs still. And Facebook down over 20% from its all-time highs. Netflix down almost 20% from its all-time highs. So it shows you that this rally is not just about, there's something interesting going on if this rally continues.
It's very wide participation and definitely
very wide, and it's people are, like me, I'm over leveraged. I've been unwinding some Apple, but over leveraged to Apple, and you can see how that has been wrong. The S&P is 5% below the all-time highs. The Apple's 25-30% below all-time highs. Amazon is 20% below all-time highs. So let's go back to that equal weighted. So that'll explain, the SL50, that chart, and then one more chart from JC that kind of was interesting is the low volatility stocks.
Oh, yeah, the SPLV. Yeah, 1 second.
He always just has some interesting takes. So the low volatility stocks. So as FANG is 20% below all-time highs, like Eli Lilly, I'm trying to think some companies in here, Starbucks, Merck, the railroads, all these like boring old economy, not fast growing companies are already back at all-time highs. Okay,
yeah, so that doesn't mean that they will outperform from
no. But I wouldn't chase them here, the low vol stocks. But what I'm saying is, Exxon's rallied 20%, 25% off its lows, versus some of the tech stocks, which are 10, 15% off its lows. Not that that December bottom is starting to look more and more like a real kind of bottom. Now, I'll bet. Now we take out those bottoms in any of these big names, and you really have to get on the defensive because. And so you have some really good levels to kind of buy the dips against, and we'll see if the buy the dips continues to work. But there's going to be a lot of chasing going on if this market move continues, especially since everybody's over-indexed to FANG, Facebook, Apple, Netflix, and Google. So let's get. So that's kind of my take. Ivan, where do you kind of see the same thing, or what?
Definitely we're in a bull market right now, yep. And I am focused on long setups, but I also keep in mind that we are at a point where many people are likely to become complacent and start chasing because they're underperforming, and we're not too far from levels of significant potential technical resistance, like 160 for the Russell 2000, 280 for the S&P 500. When it's not, they won't necessarily lead to a deep pullbacks, but I'm pretty sure that
you're being careful, but let's be honest. In the middle of, if you had said on December 24th at Christmas, based on the news flow, just the news flow, forgetting the price action, it was getting stopped out of everything but my core positions, right? That the all-time high would look this good 60 days later. There's no way I would have taken that bet. So I'm happy, and you just got to go with the flow. So let's
no one really expected such a strong recovery. Many people were talking about a retest of the lows. And it's been just a straight line up since.
But again, it's not a straight line up because the largest market caps haven't been a straight line up. They've bounced, but the straight line up has been the Twilio. Let's go to is the under $50 billion companies.
Definitely enterprise software has been, and also cannabis stocks have been the two price leaders year to date. And
no, but like I said, if you look at Eli Lilly, these are stocks that haven't been on. I think it's LLY. goes to prove how little. No, that's Callaway stock. LLY, Ivan. LLY. So, if you go back to a monthly, this thing's been in a base for, I don't know, 15 years. So I don't know, like, if I was to really think about this, and forgetting drug companies for a minute, medical, I saw this today from Charlie Bilello that like CVS, United Healthcare, another C,
the 5 biggest healthcare insurers.
The 5 biggest healthcare insurers have just as much revenue as FANG. Now, obviously, they're not going to have the same profits, but when was the last time mainstream media, we had FANG for 4 years. Meanwhile, the 5 biggest healthcare companies in the United States, which don't have global sales at all, are up or have the same revenues. They've been sneaky. CVS is in that group too. I don't know if the chart looks good.
It's interesting. UNH is 1,000% since 2009. So that's
So again, there's a lot going on under the surface, and there's many ways to skin a cat. And then you got the railroads also at all-time highs, or near. The index is right near all-time highs. I don't know the symbol, but the railroad stocks. So there's a little bit of something for everybody. I'm going to stick with stocks on our momentum list, Ivan. So let's just end with that.
Yeah, I mean, and before we move to the momentum, even gold is looking decent. So
I understand, but like all these people that were chasing gold into that correction, the stock market correction, big deal. Okay, let's get away from gold. Ugh, we shouldn't even talk about it. Okay.
All right, this is the Momentum 50 list.
Yeah. So Ivan and I run marketwisdom.com. I don't know. I'm going to quickly walk people through this.
Yes, it's we offer service on marketwisdom.com, and that service consists of 3 major sections. We have the Momentum 50 list, which is a weekly list of 50 current market leaders that are setting up for a potential breakout. And that list tend to significantly outperform the general market during market uptrends, like 3 to 4 times. And many of those stocks tend to significantly underperform during market corrections. So they're also great shorting opportunities. So for a
very, very high beta, meaning
for an active trader, that list could be gold.
Yeah.
Or something better than gold. I don't know.
Yeah. And so anyway, so Ivan and I put together this list over, I don't know, 5-10 years. It's kind of, Ivan, what are we charging for this? What are you?
It's $99 a month, or you could get it also for $79 a month if you sign up for an annual subscription.
Yep. Okay. So let's just go quickly, Ivan, to the momentum list this week. We don't have to scan down because people pay for this, but we can see that it continues to be, this is where I shop. There's, from Workday to PayPal, ServiceNow, CyberArk. I mean, no one knows these companies, which is what's fascinating about this. But let's not scroll all the way down. Let's stick to the top few. There is very. Oh, my dog is playing with a toy. Lindsay. So, here's a puppy. So, let us go look at this couple names that have blown my mind here, that's shown up here. This Horizon, this one looks interesting, Horizon Pharmaceuticals. So the biotech stocks are not my thing, but this has been this looks like a great setup.
Yeah, several different time frames. Yeah.
And the company has earnings, there's no growth this year. Okay, so that's one on the list. That's a setup, obviously, that looks really good on the daily and weekly.
Yeah.
And again, therapeutics for treatment of pain. I mean, ka-ching, at a time when, so you're going to have all these hedge funds chasing these kind of like fake or Eli Lilly's and Merck's in different colors. But that setup looks fantastic. Ivan, do you own this?
I don't own it yet, but I'm keeping an eye on it for swing trades. I mean, if a stock is setting up on a daily time frame, you should be looking at it from a swing trading perspective. If it's setting up on a weekly time frame, then you should be thinking longer term.
Yeah, I'm definitely going to test that with a few hundred shares. ARRY was the last one that worked in that space, and it's just continued to go. So
Yeah.
so risk is on, right? It's small caps and like very large caps. People too should want to be in the market. They are staying away from indexing. They're going to be playing catch up in some of the, I think volatility will increase as some of this chasing continues. And in the the money is back in the market. Okay, back to our list. Anything that you're kind of looking at?
Well, what I'm seeing is that the leading sectors, like the software stocks, are starting to consolidate, and in the meantime, we're seeing some slight rotation into other sectors like biotech, even some financials and some energy. So we're seeing some sector rotations. I mean, and which is very typical for a rising market. They correct through sector rotation. While one leading sector is taking a break, another is just starting to lead. And I think for next week, we're seeing quite a few biotechs. I mean, look at the IBB, which just broke above its 200-day moving average, and also that's very important.
It really, like, if we take out that right side, if we just go back to a weekly and think back to December, I mean, there's just no possible way I thought we would have recouped, based, and broken back above the 200-day moving average in 60 days. So that's fantastic. Like, there's going to be so many, if this continues higher from here, there's going to be so few people participating in this market. And that's why, you got to stay away from the headlines and just follow the tape. And this is like, as bearish as the tape was in December, for those that are trapped, this could get really ugly, because you look at the biotechs, these have been basing since 2014. And so that December move could have just been a massive fake out. And when a non-regulated last 2 years of this presidency, and if he gains another 4 years, it's going to be off to the races for these. And if you think about biotech, they're going to have to get their act together, because you got these telemedicine brands, these email brands that I'm sure, Ivan, you're using for hair loss, Hims and Romans. I mean, this is serious. Pfizer's, all these drugs are coming off patent, and all this telemedicine is happening and subscription businesses. And so I agree with you, Ivan. This is the industry that could be the sleeper. And I'm not saying FANG is done. I'm just saying FANG has had a great run and could rest for 3 or 4 years while they redo themselves. What's interesting too is iRobot, which kind of I've owned in the past, and SoftBank back in 2017 with their new fund, bought like 5 or 10% of that company at the top at 110. And for the last 2 years, that's been a very loose, the Roomba, amongst other things, but known on the consumer side for its Roomba business, which people love or hate, and all the Chinese knockoffs. But I would not have expected to see that stock back at all-time highs. And the way it's gotten there is just wild. So
they had a tremendous earnings report.
Yeah,
68% surprise, and when you couple that with 11 days of short interest, I mean, that's a recipe for a short squeeze. So that's what we saw in the past couple of weeks.
So it'll be interesting to watch how this, when it settles, it'll be interesting to watch how this, but I'm going to have to back, you got all this buzzwords, right? You've got robots, you've got earnings growth, you have people betting against this company, high relative strength, possible new bull market.
And also another factor that many people underestimate, shares outstanding is very, very low.
Yeah, it's a really tight float for this company. It's been around like 30 years public. And is that 33 billion market cap or 3 billion? It's got to be 30.
It's 3 billion, 3.3.
That's it?
Yeah,
That's all this company is?
well, that's what it says here.
I never can tell with those decimals. Why doesn't IBD update that? But we use MarketSmith for this stuff, and I love it because it just has so much data in the chart itself for momentum guys like us.
Yeah, it's 3.3 billion. Yeah.
Companies. So a lot of people shorting this makes no sense when you're only a $3 billion company with the, kind of like the Intel of robots. Whether you like or hate Roomba, it's just a brand name now. Okay, so that it's just a lot of interesting stuff. Ivan, anything else to add, or we'll just say goodbye?
I think that's all I have to add. I think there are quite a few sectors that are looking constructive, and
you've had a good run, right? You've had a good swing. Yeah,
I've had a really, really good year so far, and hopefully it will continue.
Now, what do you kind of get nervous when you've had a good run, or no? How do you think?
Yeah, absolutely, yeah, because
you do.
Good runs are often followed by big drawdowns. So
yeah,
but
so
they're part.
People, just because we're kind of looking at this with rosy glasses, don't rush to chase this iRobot, even though it looks fantastic from a long-term perspective. Just ran 35% since December. So again, these things will, you can't own them all, but we're just trying to bring these things to your attention. Have a great week, everybody. Ivan, thanks.
You too, Howard.